Eurozone PMIs, more signs of bottoming out in Europe, do you think?
Yeah, I think so. I think the downturn we saw at the end of last year is starting to peter out. But I mean, I don't think we're going to see any spectacular growth yet. It's still going to be a long haul this year. There's just too many headwinds, fiscal policy, political uncertainty, and so on that's just holding things back.
When we look at asset classes, and of course the story has been, move out of the bonds, get into equities now. What are you telling your clients?
Well, we're telling clients certainly that bond yields over the next few years are probably going to have a lower return than they would have done in the past, obviously. But I think clients need to be careful about moving out of bonds wholesale. Remember why you have bonds in your portfolio. They're there as a hedge for the bad times. If you know for certain that things are going to be fine, then fine, pile into equities. But the trouble is, there's still these downside risks out there, so you need those hedges in case the bad times come back again.
Sure. What do you think? What do you make of the UK market right now? Retail sales out this morning didn't look too bad. MPC this week. Mark Carney speaks this week. There's a lot going on. What are you saying on the UK right now?
Well, I mean, I think once you see through all the kind of heat and dust about triple-dip recessions, I think the fundamental story is that things are pretty much flat in the UK, and we're going to get a very slow recovery over the next year, gradually getting back to growth next year. I mean, I think the currency's starting to depreciate. People are throwing up their hands in horror about that. That's actually really helpful for the UK. I think that'll be useful. Although it does mean that it's probably less likely that the MPC will pile in and do more asset purchases than perhaps they would. So pretty much the same. A few signs of light at the end of the tunnel, but nothing too spectacular.
And Mark Carney testifies Thursday. Great expectations?
I think there are great expectations. Whether those expectations will be realised is another matter. I mean, there's a lot of focus on this idea of him, of the idea of a money GDP target. I think people have thrown that up as if it's abandoning inflation targeting. I think the way you should think about a money GDP target is that it's a souped-up inflation target, if you like, and perhaps it puts a little bit more weight on growth. But I don't think we're going to be throwing the inflation mandate out the window at all. So I think inflation will still stay under control, even under the Carney regime.